and then I saw 2 in a row here. This one kind of matches up with this one, so I thought that was kind of a good one.
Yep.
And it also seems like it's touching and going back down.
Exactly. Yeah.
This one seemed bigger, but maybe it's irrelevant. So maybe I shouldn't have drawn it.
It's up to you, really. I like that. So sometimes what's interesting, right? If there's two zones that are, let me take a step back. If there's two zones next to each other, so two red supply zones, in this case 420, 61, 420, 45, it makes an even better case that it's going to reverse back the opposite way. Because
Yeah.
hypothetically, if you think about it, it has to go up, tap the first one, and if it's going to go higher, it has to tap the next one and break through. And remember, these zones, they're not just magical little rectangles. They're basically rectangles, which are the supply zones in this case, but they have pending orders in them. Hence why when they get touched, the hedge funds have these pending orders and it starts reversing back downward. So that means, hey, there's twice as many orders sitting here. So it's more likely you need to get a put ready and basically take a put. Hence why it basically touched it twice and reversed back downward at 840 and at 905. Just makes sense. There's a lot of pressure there.
Yeah, it makes sense. Plus you have this up here, so it wouldn't.
Yeah, exactly.
I guess when I look at this, it's all
put
going
kind of
down.
dangerous.
Yeah,
Yeah.
it doesn't seem like you're going to want to buy a lot of calls. Like even right now when it's down here, it'd be risky to buy. It feels risky to buy a call because you got all this pressure.